All right, guys, how's everyone doing? This is Paul Singh, the market speculator, bullsonwallstreet.com, with the second episode of Ask Paul Anything. Got a lot of great questions this week. And if you have some questions while we're doing this, there's a chat box. In the first one I did here, didn't have it figured out, but go ahead and type something in there, and if I have some time, I'll get to it. I've got about 8 or 9 questions here that I want to get through. Hopefully we can get this done in 10 or 15 minutes. Real quick hits here. Number one is actually my favorite question. It's a little different, but it's something that I've actually looked into, and that's, do you subscribe to the 10,000 hours rule for someone to be consistently profitable? And this was popularized in Malcolm Gladwell's book, The Outliers or Outliers, basically saying it takes 10,000 hours to, I guess, be a master at something. And maybe that part of it is true. For true mastery, it takes 10,000 hours. But the question here is to be consistently profitable, and it does not take 10,000 hours. Maybe to be the best trader out there, to be the best you're ever going to be, it would take that 10,000 hours. But today, with there's so many tools available, so many things to speed up the process, it doesn't take 10,000 hours. Now, it's helpful if you've been through a bunch of different markets. What I see all the time is someone will come in, they've got the setup that's working really well because it happens to be the perfect setup for that market, and they'll get this quick run up. And they think everything's fantastic. That this is easy. They've mastered it, and that actually happened to me before I blew up my first account in the late '90s during the internet boom. And then you go through a few different markets, and you see that that's not the case. Different setups apply to different markets. But you can even speed that process up by just studying past markets. So there's a lot of studying you can do. There's a lot of reps you can get in. And then, of course, there's all these different tools available. Plug here. You can talk to Kunal. You can talk to me, Bulls on Wall Street, me personally. Just having someone there to guide you, to educate you, that really speeds up the process. So it doesn't take 10,000 hours. You can be a profitable trader really quickly. I wouldn't say it's going to take, you could speed it up to a month, but you can go through a lot in 3 to 6 months if you study effectively and smart. A great question there, and don't think it's going to take you 10,000 hours to become profitable. All right, number 2, what was your aha trading moment? The I get it now moment. I've heard you speak about it in the Chat with Traders interview and some other places. Good questions, because I think I talk about that all the time. I blew up 2 accounts, then I had that aha moment, which kind of turned everything around for me. And when you get one of these moments, there's nothing specific. It's not like there was a setup I figured out or there was a style I figured out. It's really a bunch of things coming together. And I've seen this happen with members of the Trade Report. After listening to me for about a month or 2, everything starts to come together. People I've worked with, I've mentored, you see it. You see that moment where in the beginning, all this information is coming at you. And it's hard to put together. It's like a puzzle. And then once everything kind of comes together, that's when you get that aha moment. For me specifically, it was when I figured out that it just wasn't the setups that I need to be looking at. I needed to have this organic process where I understood how the market was working, how sectors were working, when I figured out money flow and how that impacted my setups. Once that all came together for me, I've been profitable ever since. That was the real aha moment for me. All right, another great question there. Number 3, how many positions are you willing to hold at one time? I got 2 versions of this question. One was a general question. I'm assuming that's to swing trading. Another was specific to day trading with the amount of trades I'll make in a day. For positions I'll hold at one time, it varies. There are points where I'll go on margin and trade. If you've got, say, a $10,000 account, I'd go up to 20,000 when I was trading a smaller account like that. Now, with the bigger accounts, one of my accounts, if it's 200,000, I'll go up to 300,000-400,000 on margin on it if I like the market and if I can really get aggressive. I think it's time to get aggressive, and I'll still manage my risk properly. But I'll take more positions at that time, obviously. In the trade report account specifically, If you go look through the stats, trade report members know this. There have really been 3 specific periods during this year where I've become really aggressive, and that's where we made most of our profits. I've had some drawdowns during other periods in the market in a year that I've been up 50%. So even in a really good year, you have these periods where there's going to be lulls, and you really have to know as a swing trader where to push it and where to kind of hold back. So for much of the last 2 months, it's been very rare for me to take on more than 2 to 3, maybe 4 positions at a time. Whereas in early 2016, I had built up to about 12 positions. There was another period in the spring where I did the same thing. I had 8 to 10 positions. And then post-Brexit, these were the 3 periods where I made most of my profits. I was up around 8, 9 positions. And then there have been other times where I had no trades. I think it was late September, I had 0 trades, 0 positions on at the time. And now I've got 3 positions. So it really depends on the market. Specific to now, I'm looking to build. If the market continues to move here in the direction we want it to, I will slowly start building it. I never go all in at one time, or I rarely go all in at one time. It's usually a slow build. So I started with the 2 positions. Those of you who've been following us on the Bulls on Wall Street blog, on Periscope, on the other platforms where I've been talking about this, there are certain areas post-election here related to Trump and related to Hillary that we should be aware of right now. Biotech, marijuana stocks, finance, and a few other sectors, commodities. These are the sectors we're starting to see some rotation into, and I'm slowly building. So I've got a biotech position right now, and I've got a marijuana position right now, 2 positions, and one that I was already holding. And that's it for now. But maybe next week I add, if the market continues to show me something, I'll add another 1 or 2 positions. All right, great question. Number 4 here, how do you decide whether you pick a position on a stock rather than a stock's ETF? So obviously this is someone who's been paying close attention to my sector analysis when we're tracking money flow, when we're trying to look at where to be in the market. And I've alluded to this before, that I pick the sector that I want to be in. So for example, biotech. I want to be in biotech right now. I want to be in certain commodities areas right now, steel. So what I'm going to do is I'm going to analyze that sector, and then I'm going to analyze the stocks within that sector. And from there, I'm going to look at the ETF as the underlying kind of principle for my technical analysis. But the actual trading vehicle is going to be the triple leveraged ETF, so I can get that extra volatility, which will make it fly just like a low float momentum stock would. And generally speaking, when you're looking at these sectors, especially the commodity sector, maybe semiconductors, a few other sectors here, most of the stocks will not be able to beat that sector ETF. So I'll just trade the sector ETF. But there are exceptions, and I will look for that high flyer within the sector to trade. So if I find something that has a really fantastic setup, has a ton of short interest, maybe it's low float, and it's proven that it can move, it's a highly volatile stock, I might take that instead of the sector ETF. All right, number 5 here. When do you enter your multi-day swings? What time of day? At the open or at the close or intraday? It really varies. It depends on the market. It depends on the kind of signal I'm getting. In 2016, I've been doing a lot of them towards the end of the day because there have been a lot of intraday fake outs. So I want to see that confirmation going into the end of the day. But there are other markets where I'll take a trade right at the open. There's specific setups, for instance, earnings breakouts that I enter on the day of entry. I'll take those right at the open sometimes. It really depends. There's a number of different factors, but lately, because of the way the market has been playing out, I've been taking more of them towards the end of the day to make sure we've got that confirmation. But there have been exceptions to that. All right, number 6 here. When day trading, do you have a max number of trades per day? And I hear people talk about this a lot. I won't trade more than 5 times or 10 times, and I don't see any reason for this rule. For instance, this post-election day trading has been fantastic. We've had some highly volatile days. Why would you quit after 5 trades or 10 trades, whatever your rule is, if you're seeing more fantastic setups? So don't base it on a number. Base it on what you're seeing. Now, if it's a slow day, most days have lulls intraday in the middle of the day, that you want to slow down and probably not take any more trades. And on those days, you should say to yourself, okay, I'm not trading anymore. But if you're continuing to see setups, there's no reason not to take the trades. Okay, number 6 here. With do you have any other exciting examples you've traded intraday during the Trump rally? I took so many trades this week, I can't remember one right now. Maybe I should have come in prepared for this question, but I will tell you, I was trading a lot of the leveraged ETFs intraday, so biotech, a little bit of energy, financials were fantastic. Some of the sector stocks like FCX were moving. And then there were the regular gappers, and I can't even remember one of the tickers. One was SGen. I remember trading SGen, and it was a great trade, but I did cut the profits off a little short. It ended up moving a lot more than I thought it would, but there were a few others here, but mostly gappers, and you can go back and look at the stocks at Gap. There were some fantastic movers here this week. All right, we've got a couple of other questions here. What indicators do I use? And if you guys have any other questions, you can throw them right into the chat here. I have figured out how to do it. So I've got a few questions here. What indicators do you use? Now, I don't really need any indicators, but I do use stochastics as a guide. Basically, I just look at, when you get to the point where you can just identify the price action and identify the money flow and volume patterns, that's all you really need. The indicators are just guide. They're either measuring rate of change, which is price action and momentum, or they're measuring something within the volume or relating the two. And if you can eyeball it, that's always the best way to go. But I still do use a few indicators as a guide. Number one is stochastics for overbought and oversold and for divergences. And then also the moving averages, because everyone else is looking at the moving averages. All right. Why don't traders take advantage of volatility after the close on earnings releases? Now, I'm going to use a term from my partner here, Kanal. He calls after hours and pre-market trading the wild, wild west. And I've always thought of that as well. Although I will say every year I pick one new thing to focus on, to learn, to master. This year, since January 1st, I've been working on pre-market trading. And there are some types of stocks and some setups I've worked on that I feel very comfortable not trading pre-market. So I do more of that. But most traders are going to trade during market hours. There's a lot of manipulation after hours. But I do see what you're saying. I'll give you one example. When Trump got elected, as a safety net, we had taken VIX. If he won, the idea was VIX was going to pop, which it did during after hours. And man, I don't remember how much exactly, but that leveraged ETF, I think, was up 30% at one point after hours. I could have taken profits at that time. I did get a little greedy because I thought the way this historically this type of stuff plays out is you will get a continuation the next day before the reversal. And this was very odd that all of this, what normally takes a few days to kind of work out, basically worked out in one after hours and pre-market session. And then by the open, everything had kind of got back to normal. So it was really weird. Looking back, maybe I could have taken profits after hours. I ended up taking a very small profit, almost break even on that trade. But you're right. You can do some of this during after hours trading. Okay, GM Knight 77. I'm thinking about taking the Bulls on Wall Street Bootcamp. May I ask what you teach? So the bootcamp is focused on Kanal's trading style, his day trading. We do get a little bit into swing, so I'm not really a part of the bootcamp, but I do come in as a guest for 2 or 3 lessons, and I get into some of the swing stuff, some basic swing. Actually, some of it is actually more than basic, so it's really worthwhile. I get into sector analysis, probably the most important thing I do, building my watch list, and then I get into 2 specific setups related to earnings breakouts and shorting high flyers. So you do get an introduction to what I do in that bootcamp. Okay, what's your outlook on the financial sector coming in the coming weeks? Okay, what financial sector? Well, financial sector is one of the 5 areas I'm looking at very closely. In terms of my outlook, I don't like to make predictions, but it's something I'm watching, and I'm continuing to look for indications. So right now we've had this big pop, a lot of volume coming in, money flow is basically going out of tech into some of these other areas like financials. Now, it has to prove me right, of course, but I am watching it. I'm looking for an entry right now. We are extended, so it's tough to enter here. But if we can pull back and then continue, I would look to get into the financial sector. Seth is raving about the Bulls on Wall Street bootcamp. Fantastic. All right, so this was a really great session here. A lot of great questions. Remember, guys, the weekly report, free weekly report is coming out. Head over to bullsonwallstreet.com to sign up for that. And I'll see you guys next week with another one of these shows here.